One of the biggest tools you've got for creating change is sitting in your back pocket. And the problem is, probably nobody has told you how to use it. Your KiwiSaver, retirement fund, or other investments are really powerful and can be the ticket for ordinary people actually making a difference. Ever been told to vote with your wallet? This is far and away the biggest wallet vote you've got. So enter Mindful Money. Barry Coates is the guy who's running it all.
I mean, the most shocking thing that we just produced a report on recently, KiwiSaver investment in weapons have increased by 40% over the past year.
So welcome to Making Sense. It's the podcast for people who want financial freedom without giving up their coffee. I'm Frances Cook, financial journalist and fellow financial freedom seeker who makes money simple for you. KiwiSaver and other investments quietly fund companies, industries, and frankly, ideas every single day. And like it or not, where that money goes can be more powerful than voting or taking part in consumer boycotts $5 at a time. Because many of us have built up tens of thousands of dollars in there, maybe more. So suddenly, these companies sit up and take notice if you threaten to take that cash away.
Through much of my career, I've kind of looked at ways to make a difference. But I've come back to this issue, that money and finance is a real lever for change.
What you might not also realize is how fast KiwiSaver is stacking up for everyone.
Yeah, we used to look at KiwiSaver when it was kind of $30, $40 billion and think, gee, this is growing fast. And now it's $135 billion and it's still growing rapidly.
And yes, we're all busy. So it's time to look at the strategies for using this powerful tool, taking control of what you can without having to become a private investigator or a spreadsheet nerd. Because you can get rich without selling your soul. This is how it's done. Barry, welcome in. We were just talking before I got you behind the mic. You started Mindful Money in 2019, which is funny because I feel like I've been talking about your work much longer. But yeah, 2019, quite recent actually. What prompted you to want to start it?
Earlier on in my life, I got bitten by the bug on sustainability and I helped start an ethical investing network in the UK. This was after something some of your listeners may have heard of, which is the Earth Summit, which happened in 1992, kicked off the whole sustainability movement. And I went off and did other things, but stayed in touch with what was happening on ethical investing. And I figured this was something whose time was about to come. And that particularly when the evidence started coming in, to say that investing ethically is not only a good idea ethically, makes you feel good about your investments and does good in the world, but actually is good financially. And the data started coming in to say, yes, actually you can lower your risks and have returns that are at least as high, if not higher, than conventional investing. But around that time, I had been a Green Party MP, a list MP, and I suddenly, after a fairly tumultuous election in 2017, found I wasn't an MP anymore and wanted to do something different. And so I came back to the idea of ethical investing, first tried to find an ethical investment myself. And, I've got a master's from Yale University in finance, and I gave up after a week because the data wasn't there, lack of transparency, used different terminology, etc., nothing comparable. So Mindful Money was the way to give people an opportunity to have research that was objective, independent, and comparable, so that you could go onto the website for free and be able to compare different funds as to what they invest in, which is, after all, kind of what is at the heart of whether or not investment is ethical.
Mm-hmm. And I think as well, when we're looking at ways that we can try to make a difference in the world, it's really easy to feel powerless, to feel like there's not much you can do, especially some of the problems are really big. And there are things like there's consumer boycotts or action like that. There's writing to your MPs, which I would hope more people do, but it does make an impact. It can also get ignored. to me, and maybe this is my bias from being in the money world for so long, but I look at something like my KiwiSaver and I think that's one of the biggest levers I've got. I mean, what do you think? Why is finance, and especially things like your KiwiSaver, why can they be so powerful in this area?
Through much of my career, I've kind of looked at ways to make a difference and done lots of things on consumer action and been in politics, tried to influence policy, etc. But I've come back to this issue that money and finance is a real lever for change. And as the old saying, money makes the world go round, it's true. And through our KiwiSaver, we can have an influence where the money goes around in the right way or to achieve the wrong things in the world. And so, every little thing that people do is a contribution to a wider movement of people around the world who are thinking the same kind of thing. So, for example, people who say, I don't want to invest in fossil fuels. It's kind of oil and gas. The time has gone. Coal, those are the fuels of the past. It's not growth. They're polluting our planet. These companies are trying to influence governments and funding climate deniers, and they're part of the problem. And so people say, okay, I want to switch from fossil fuels and invest in other things, including renewable energy. And, when you do that, you're not only acting alone, in which case you may feel a little powerless. You're acting with people around the world who have now divested the sum of $40 trillion US. 40 trillion isn't, it's 12 zeros. It's an 13 actually, if you count the 40. But it's a massive amount of money. And that really has an impact. So when people are saying there's not much I can do, actually, it's the same as your individual actions on climate change. That yes, seeing other people are doing it as well, it adds up. And so we have to remember that far from being powerless, we can join in a movement that is really making huge change.
Yeah. And I mean, I even look at how fast my KiwiSaver built up. And there were many years there where I was not earning that much and it was still going in and getting to work. And it's built up a little pot that grew a lot faster than I would have thought. I've talked to a lot of people who feel the same way. And then you think about replicating that along every person. So if we're talking all the retirement schemes, huge pot of money. What about just KiwiSaver? If we look at just KiwiSaver, how big is that pool and how much power do you think that gives the everyday person?
Yeah, we used to look at KiwiSaver when it was kind of $30, $40 billion and think, gee, this is growing fast. And people would say, oh, it'll soon be over 100 billion. Well, it was, and now it's 135 billion and it's still growing rapidly. It's growing because people get returns from their KiwiSaver and they stay in your account. But also as you get your employer match, you get money in there as well. And the government gives you a top up. It's a bit smaller top up than it used to be, but it still helps. And so people's individual balances grow, the collective balance grows. And it's really important for New Zealand. This is the pool of domestic savings that New Zealand's never had. People have invested in houses instead. So we've got, $1 trillion invested in houses, but we've got very few financial savings. And it's unbalanced, as people are finding out now that house prices don't always go up. And actually having a diversified investment that includes financial assets is a good investment strategy. And particularly, again, if you diversify those financial assets across different types of investment, then you get a way to buffer yourself from some of the winds of change that happen in the economy.
Well, yeah. And I think it's quite interesting with KiwiSaver becoming more and more of a force. I do think it's made New Zealanders understand the share market more. It was something that not as many of us had dealt with. And now we've got this lived experience from watching our KiwiSaver. Now, KiwiSaver can, of course, invest in all sorts, but I would say the backbone of it probably is the share market. And then there's other things that can come and go from that. The share market, of course, just being a bunch of businesses. But when we've got some of those really big businesses, I mean, you look at something like Unilever, which is this enormous global company, and all of these other companies shooting off it, other companies shooting off that, to dig into these companies to see what they're all doing, what their next company down is doing, and what they're involved with at every stage, does get a little complicated.
a little, very. Yeah.
You're like,
yeah,
yes, this is what I spend my life doing, a little. And I remember when I was working in Parliament as a political reporter, and I think it was probably one of the first KiwiSaver scandals when it came out that cluster bombs were included in many people's KiwiSaver portfolios, and people didn't realize. And now, weapons exposure is a thing that people have different thoughts on, but cluster bombs are a particularly nasty exposure. They're a particularly ruthless weapon that can cause a lot of wider damage. It's sort of one of those areas where I think most people can universally say not great. And so it came out that a lot of KiwiSavers were invested into companies that were making cluster bombs at some level, and people were horrified. And that scandal went for quite a long time. And I think people were quite surprised, upset that their retirement funds were going into that. What do you think now? Are we sort of getting a bit wiser to sort of the exposure that we can have from our retirement funds, or are these things still sneaking in there?
These things are not only sneaking in there, a lot of them are actually growing. So kind of to go back to cluster bombs, there was a international convention signed which kind of suggested that it was probably illegal for New Zealand fund managers to invest in cluster bombs, so not many of them do now. But it's not quite clear from international legislation that nuclear weapons would be illegal. And what we found when we started up in 2019 was that there was $100 million of KiwiSaver funds invested in making nuclear weapons. Now, from an avowedly kind of anti-nuclear country, that's a lot. It's spread over 100 different funds, 100 million over 100 different funds. So we went to those providers and said, look at what the public are seeing of you and investing in things that they really, really don't want to invest in. And so they started to exit. Now we're down to around $12 million. So it went down from 100 million to 50 to 25, and now it's about 12. Nice. So still too many, but most of those are in what's called index funds. So they're in something like a US index, like an S&P 500, which has got some companies producing nuclear weapons in them. So, and so that's gone down. Other categories haven't gone down so much, or have even risen. I mean, the most shocking thing that we just produced a report on recently is that weapons have increased by 40%. KiwiSaver investment in weapons have increased by 40% over the past year.
How?
Fund managers take a look at what's happening in Ukraine, what's happening in Gaza, what's happening in Yemen and Myanmar and other places around the world, and they rub their hands together and they think, ooh, profits.
There's strong demand.
And so there's the prices of the share prices of the weapons companies have increased, and many New Zealand fund providers have gone into those companies saying, well, we'll go for those short-term profits. Now, if you look at what the public wants, 80% of the public say they don't want to invest in weapons. And a lot of people might want to kind of make a distinction between the weapons that are produced to help Ukraine fight Russia versus the weapons that are used in Gaza. But they're the same companies. And these companies sell their weapons all over the world to anyone who'll buy them. The regulation of weapons is very lax internationally, so weapons even end up in the hands of the Taliban and our enemies around the world. So you can't sort of inoculate yourself when you're investing in weapons that you're not contributing to weapons that are used in human rights disasters. And so for that reason, 80% of New Zealanders say they don't want to invest in weapons. But the fund providers, the KiwiSaver fund providers, have increased their investment in weapons. And so there are areas like that. There are basically two that are particularly problematic at the moment. It's weapons, and surprisingly enough, it's fossil fuels. And so what we've seen is an increase in the amount of investment going into those. Some of the more traditional issues that people know about ethically, tobacco, gambling, pornography, those have declined. We're really pleased when people look in their portfolio and kind of take a look and say, well, I didn't sign up for that. And so often they shift out of those funds with those things that they don't like in them. But still, the amount of money in weapons and fossil fuels has been going up. So, on one hand, it's good news that the unethical issues are going down. But on the other hand, there are a couple of exceptions where the fund managers think they can make some short-term profits out of Ukraine's war with Russia and the war in Gaza, etc.
Let's talk a bit more about those conflicts, because I know a lot of people who follow this podcast, listen to this podcast, are deeply concerned about those and certainly don't want to be making it worse. If anything, they would like to be doing what they can to put pressure on to make things better. And a lot of feelings of hopelessness. If my comment section is anything to go by, people feel like they want to make things better and there's nothing they can do. So when we're looking at KiwiSaver or retirement funds or investing in general, as a lever you can push on, are there levers you can push on there? I mean, you mentioned the weapons manufacturing. The fact that the weapons investment has gone up, I think, would horrify a lot of people. What can they do to make an impact on that front?
Two things, really, really easy. The first and in a way, the most simple is have a look at what's in your KiwiSaver. If you don't like it, there's a facility on Mindful Money you can find a KiwiSaver that is free of weapons, free of fossil fuels, etc. And there's a set of criteria you can put in, shows you funds that most closely match your criteria. So that's one thing you can do. The other thing takes a bit longer, but actually is a bit more powerful, is if you find stuff in your portfolio that you don't like, go back to your fund manager and say, this is not what I want for my investment. And the reason that that's more powerful is because it sends a message back to the fund manager. Otherwise, if you just switch funds, then they don't know why you've switched. But if you go back to them and say, I'm appalled by what's happening in Gaza, or I don't want to invest in weapons companies, or I'm worried about fossil fuels, then your view gets noticed by them. And it's surprising how few people do that. So that even a sort of reasonable amount of mail can have an impact on those funds, because like any other company, they're dependent on their customers. And if their customers aren't happy, then they've got a problem. So people should let the fund providers know. And yes, everyone's got an email that you can send to. Usually it's customer service, and you get some kind of bland reply. But actually, your views are registered. And if you want to continue going back to them, then often you do get a more substantive response. And prior to setting up Mindful Money, I've done that and eventually got a change. And one of the fund managers, because they often aren't attuned to thinking about things that the public think about. Often they're kind of investment people, and they don't understand how deeply people feel about issues like weapons and like the situation in Gaza and like climate change. And so in a way, it's up to us to be able to tell them these are issues we really care about. And so people really can have an influence that way.
And I think about it as well. I mean, I've seen various boycotts around online. Starbucks, I think, McDonald's, Spotify. There were various boycotts at various times. And I look at most of those, and of course, consumer action can be powerful when you work together. But they're $5 boycotts. When you look at the average KiwiSaver balance, we're talking a $40,000 boycott. And that pick your biggest weapon first, right? If we're talking weapons, pick your own biggest weapon first. If you've got this KiwiSaver balance sitting there, they don't want you to switch. They want you to be invested through them.
Absolutely. That's how they earn their fees. People's voice on this, as you say, does make a difference. On climate change, for example, we did some figures on climate change. So the idea of carbon footprint is the amount of carbon dioxide, of greenhouse gases, that every individual is responsible for through their actions. So it might be driving a car. It might be the food that you eat. It might be your overseas travel, your electricity you use, etc. So everyone has a footprint. Our Auckland Council estimates that's over 7 tonnes per person. And there are ways that we can reduce that. What they haven't added in yet is the amount of money in your KiwiSaver that is funding climate emissions. And we estimate that's another 2 tonnes. So on top of the 7 plus that you're having already through other things, there's another 2 tonnes that your money is going in to support the companies that are emitting greenhouse gases. And so you can again influence that by talking to your fund manager, telling them you want to get out of high emissions companies, want to get out of fossil fuels, or you can switch to a fund that has got low emissions.
You mentioned something before as well, and I want to dive into this because it's a murky area, right? For starters, everyone has different priorities. Everyone has different places that are important to them, different ethical priorities. But the other thing is where you can have the most impact, even if you do have the same ethics, can be murky. And you mentioned before, maybe a company is selling weapons to Ukraine, and great, that helps them defend their country, but they're selling to other people too. They're not too worried about who they sell to, they just sell them, which is tricky. And then another one, this one came up, and I want to run it by you because it's really interesting to me. It really shows the murkiness to me. Caterpillar, the company, has a lot of heavy machinery. You flagged them, correct me if I'm wrong at any point here, Mindful Money flagged them as a company to avoid because their bulldozers were being used to bulldoze Palestinian homes. And then Pathfinder, solid ethical investing company, did keep investing in them for a while, saying, well, the company itself isn't bulldozing the homes. They're being bought. They have no control over what they're being used for. They eventually then changed their minds on that and said, no, actually, we're not going to invest in Caterpillar either now because it is being used wholesale in this conflict in a way that we don't agree with. And to me, I look at that and I feel very conflicted because I look at that and I almost have a solid fence set where I say, I see all sides on that. That is really complicated and I don't know where I land. When you're trying to work through some of these issues that are a bit murky, how do you work through that? Like, what sort of priorities do you have to decide where these companies land on the scale?
For one thing, you do really good research. And we worked with Pathfinder and other fund managers to provide the evidence that, in fact, Caterpillar knew very well where their bulldozers were going and how they would be weaponized through direct contracts with the US military that then went to the Israeli Defense Forces. So on that issue, increasingly, that's an area where funds around the world have done that research, and there's now a lot of funds who have come to the same conclusion that Caterpillar is not unknowingly involved, but is more involved. So it speaks to two things. One is the need to do the research, and though we're a relatively small charity, we pride ourselves on doing that deep research. And we're utterly clear with the kind of methodology of how we do these things. So it's all available on the website. And the fact that we're independent and objective really helps because we're not kind of carrying any can other than the can of trying to identify the things that the New Zealand public cares about and doing research on those. And so every year what we do is we do an annual survey of the New Zealand public, 1,000 people, statistically significant survey done by an external provider, research provider. And that tells us the things that people really care about. So they care about weapons, not just the kind of cluster bombs and nuclear weapons. They care about weapons as a whole. They care about fossil fuels. They care about tobacco and gambling and pornography and alcohol and particularly about some of the ways that companies behave around violating human rights or around animal cruelty, testing products on animal, for example. So we have these preferences for the public, and the way the Mindful Money works is we're not making ethical decisions for anyone. We're providing the transparency of information so that the things that the public are concerned about are shown on our website.
Mm-hmm.
And so when people want to make their decisions, they use their own ethical stance to make decisions. We're not kind of saying, hey, here's the ethics, accept these. And so I think that transparency really helps people because they can decide this issue is important to me, that one not so much so. And so that's the way we try to use the kind of customer-driven, public-driven values judgments, and we provide the kind of evidence that sits in behind it so that we can give out accurate and timely information on the website. And after we do all of our analysis of all of these companies and all of these 900 funds, so that's about 370 KiwiSaver funds and about 500 other investment funds, we go back to those fund providers and say, here's the draft data. Tell us if anything's wrong. And it's an important verification step for us. And then we iron out stuff that there may be a dispute about on the research before we go live. So that's the way we try to make sure that people can trust the information that's on the website and make sure it's driven by their values and ethics, not by anyone else telling them what those ethics should be.
Oh, I so agree. And I actually think that was one of the really smart ways that you set up the website, that people can go there and say, these are my priorities. It's not just what's an ethical investing fund, because I think to say this fund is ethical is it's broad to the point of useless, because the things we care about are also different. The fact that you can go to Mindful Money and say, these are the issues I care about, which funds are aligned with that, that's so powerful. I mean, when we're talking about these issues, and I agree with you, I don't want to tell anyone else what to do. I just want to make sure that they have the tools at their disposal that if they care about something, they can then go and do something about it. It's so easy to feel disempowered in this world. Do you have any examples of times when companies have changed what they're doing because of investor pressure?
Yeah, I think there's a lot of that, and the pressure can come from people taking those decisions to get out of a company that they don't like, or the fund manager for investors maybe hears that their customers don't want something, so they will then go to the AGM, the annual general meeting of the company, and vote their shares that they have on behalf of all of us KiwiSaver account holders, and they will vote those shares to go in a certain direction. And that happens pretty often. And we like it when fund managers do that because it can make a difference. If you're a New Zealand fund manager, though, it's much easier to make a difference to a NZX company than it is to a global company for which you have an infinitesimally small amount of shareholding. So that's where kind of those exercises of influence are much more effective. It's generally the local New Zealand companies, occasionally where there are groupings of shareholders, it can be on the larger companies as well. But the other side of all of this is kind of not only what you want to avoid, but it's what people want to invest in. And so we ask two questions, ask lots of questions in our survey, but one of them is what you want to avoid, and we've kind of been talking about that. The other is, what do you really want to invest in? What are you enthusiastic about? And people kind of give us the answers around healthcare, around affordable housing, around new renewable energy, around clean technology, fresh water, etc. And so what we're doing at the moment is we're putting that information on the website as well. And it'll go live early next year, but it'll be a great opportunity for people to be able to go to their KiwiSaver and say, well, there's companies I don't like, but oh my gosh, I really like these companies that are on the website that I can see that they're investing in. And I think that's where increasingly we're wanting KiwiSaver funds to go, not only to avoid the things that are harmful, but actually invest in the stuff that makes a difference. It makes a difference to people, makes a difference to the planet, makes a difference to the transition to net zero and climate change. All of these things can be influenced through our KiwiSaver funds. And so people will be able to see that. And we're really excited by the prospect of putting this information up. It's a huge amount of work. I can't tell you. But it's worthwhile, and again, we're making it free to the public. So this is kind of part of being a charity, so wonderful being a charity because you can give stuff away for free.
Yeah.
It means it's sometimes hard to pay the bills, but it's kind of like, this is what you do.
Yeah. Yeah. Well, it's funny that, isn't it? Where it's the way you put it there before, I really love that, where it's not just saying I don't want to do bad things. You're saying I actually want to back the good stuff. And I think that's another really important thing to recognize as well. And I think we often get very focused on the type of ethical investing most people think of is not participating in the bad stuff or whatever you feel is the bad stuff. But there's actually more than one ethical investing strategy, isn't there? Can you run me through them?
So the three major strategies, and so slightly simplistic view, there's variations on all of them, but you can avoid the bad stuff. You can still be invested in some of the companies that aren't so bad, but those that you think you can change. And then your fund manager engages with them to change those companies. And that's often called stewardship or engagement. And that happens. As I said, it's generally easier to engage and influence New Zealand companies if you're an investor in New Zealand. So your fund manager can kind of engage with Fletcher Building or any other company on the NZX and try and change their policies. And the third area is you can invest in the good things. And you can make change happen via putting money into things that will change. And how that makes a difference is if your fund manager is putting a whole lot of money into, for example, a solar provider like Lodestone, which is an unlisted company. It's fairly early stage, but they're building solar farms across New Zealand, and they're integrated into farms, and they're relatively small scale, really well thought out. And so when that happens, there's a direct kind of flow of funds into a small company that helps them grow, provides them with a lower cost of capital than that they would otherwise have. So there's many, many kinds of companies like that in New Zealand. We've got a fabulous group of small, growing companies, exciting companies that really, could make a bigger difference. So we're trying to get fund providers not only to invest in the kind of listed companies that are doing good things, but in our own New Zealand small and medium-sized enterprises, because that's where there's a real capital shortage. And so we're excited by the prospect of more money flowing to the companies that can employ Kiwis, that can grow, that can become well-established internationally. And so, that I think is the future of KiwiSaver, to say that we can play a role in building a stronger New Zealand economy and through particularly the things that do good in our economy. And so, that's a vision for KiwiSaver that we can get really excited about.
And I meant to bring this up earlier because it is something that it's a comment I get a lot on the various places that I put out information, but particularly social media, is I will get people saying, I don't care, I just want to make the most money possible. And hey, more power to you, right? We've all got to pay the bills. But I don't know, is there actually a relationship between, if you want to ethically invest, if you want to have this sort of impact, do you have to hold your nose and just make less money?
No. I mean, we've looked really closely at the evidence, and there's just so much evidence. There have been literally tens of thousands of studies done to compare ethical with non-ethical funds. And often it's where you've got the same fund has got an ethical variant and a non-ethical variant. Often it's kind of different funds across a number of different dimensions. So looking at the weight of that evidence, what the evidence says is that because when you invest with ethics in mind, you're often managing the kind of risks that can lower the share price of companies. So it might be environmental liabilities, or it might be a company that does a really bad thing and loses its reputation, or it might be a company that treats their employees badly and they all leave or sue the company. Yeah, so there are lots of ways that good ethical behavior is attuned with good management. If you think about the most trusted companies in New Zealand, they're usually companies that have sustainability and good ethics at the core of the management. They do well, and they do well financially. So it shouldn't be too much of a surprise to say that over a long period of time and over a diverse number of companies, generally you've got lower risks, and the formulation is at least as high returns. So skewing on the upside. So it's at least as good, if not better. And that's the general kind of consensus from our review of the evidence. There are short-term periods where that advantage may be lower or even go slightly negative. And that's when investors can get short-term hits from things like investing in weapons that then are used to bomb Gaza or wherever. And so sometimes investors can get a short-term sugar rush from those kind of investments. But then investors kind of have to have their trade-offs. Do they want to invest in those kind of companies? And are they prepared to sacrifice what are often quite small profits and quite a small increase in returns for that kind of practice? So it's a short-term, long-term thing. Over the long term, I think you'd have to say that returns are as good. And interestingly enough, we asked the New Zealand public that in our survey, and people overwhelmingly say that in the long term, ethical returns are going to be higher than conventional returns. And that really surprised us. We didn't realize that the public kind of had been convinced by that evidence, because there's a lot of people who say, oh yeah, go woke, go broke, usual ridiculous kind of
glib sayings.
Parody. Yeah,
we love those.
but actually the general opinion from people is quite the opposite. To say that they recognize that ethical investing is good investing. And if you look around the world, the major fund managers around the world are taking these issues seriously and using them in their investment practice.
What about the other end of things? Because here's another little saying that I've seen floating around the internet, and I'll just put my own bias out there first. I find it irritating, but your mileage may vary. Where people will often say things like, there's no good actors under capitalism. So the idea of you can have any sort of ethical company that you could invest into, make money from, still keep your soul, that they just nihilistically do not believe it's possible. What do you think of that?
I think there's a spectrum of companies out there that range from the very, very bad, to the pretty shocking and probably shouldn't be allowed to stay in business, to those who may not be pure as a driven snow, but are pretty good companies producing pretty good products that may have a positive impact on our world and may be making a difference. And I'd say, if you say that it doesn't matter, then a fair bit of your money is going to go into those really bad ones who should not exist. I'd rather my money went into the ones that are doing good things in the world and may not be pure as driven snow, but actually they're going to be a whole lot better for our society, for the environment, for the climate, than abdicating those decisions and your money just going into companies that will do the wrong thing.
Not letting the perfect be the enemy of the good.
Well, exactly.
Yeah.
Yeah.
Do you have any examples of funds that have done really well while having these ethical priorities, or even companies that are doing good and making cash?
Yeah, there's lots of good examples around the world. I don't want to kind of name particular funds because, I mean, people can go on our website and see who performs well. I kind of we tend to want to be quite how should I say, circumspect about not promoting particular funds.
You don't want to be seen as endorsing.
Because we don't want to endorse, and we want to make sure that the information is available to people and they can make up their own minds. So, but suffice to say, some of the funds that are most ethical are also the funds that are doing exceptionally well financially. That's true internationally as well as in New Zealand. And so those are both companies and funds. People can go and look it up themselves and have their own preferred ethical fund.
Yeah. We were talking before about the tricky grey lines, and that's something I want to come back to just for a moment because, we mentioned about the big companies and they have all these subsidiary companies and they do different things, right? And I mean, Boeing, they have planes that most of us have been on holiday before and jumped on a plane to do it.
Yep.
Also involved in weapons.
And nuclear weapons.
And so that's, tricky. And one rule of thumb that I've seen a lot of investment funds use is they will say, okay, we're going to avoid the companies that have substantial holdings in these certain areas that we're wanting to avoid. But they'll often also say they've got so many various companies, they could be involved in so many various things. We're going to guarantee no more than 5%, say, weapons exposure. We're aiming for 100, but we don't want to guarantee that because there could be something in the fine print that we've missed. And so they'll often put like a 5% buffer in there. It will be no more than that. What do you think of that? Is that a good rule of thumb? Can we be aiming higher, or is that just a reality?
Generally, a lot of the global companies are quite diversified. So as you say, they'll have lots of different business operations, lots of different customers, etc. On some categories, we do use what's called a materiality level. So kind of a rather techie term, but being material means that it's at a certain level. And so we use for some things a materiality level of 10%. For others that are kind of really particularly serious and urgent, so fossil fuels, for example, we generally use a 5% materiality. If it's really kind of causing major damage, we use a zero tolerance. And the zero tolerance is applied to coal, for example, and tobacco, and animal cruelty, and human rights violations. So those are the kind of things. Gambling is generally a little less so at 10%, but people can go on our website and see what those materiality limits are. But it's recognizing that there may be some small pockets of big companies where the big company itself isn't doing all bad things, but they've got a small part of it that is. So those are generally fairly common across the industry. Ideally, we'd like to go to a zero threshold for everything. But in a way, we also want to operate within the industry and influence the industry. And so on a couple of these areas, we adopt the kind of norms that will allow the well-behaved funds to be able to show up as kind of relatively free from some of the damage.
Hmm. You mentioned before about fossil fuels. We didn't dive into it much at the time, but let's dive into it now. The weapons and the fossil fuels are a category where we're seeing actually an increase, which fossil fuels, that particularly surprises me because I feel like there's been such a long history of pressure and work in that area. And yet here we see this increase. What's behind that?
I think partly the perception from the investment managers that the Trump administration is kind of favoring now the fossil fuel companies and throwing subsidies, taking off regulation, kind of supporting them wherever Trump goes. He tries to cut deals for US gas producers and other fossil fuel companies. So, some fund managers say, oh, well, we better invest in those. Actually, oil prices did spike for a while when Russia invaded Ukraine, but have subsequently come back down. There will be a time when oil prices go down a lot. And it's because of the kind of demand and supply balance. You remember during COVID-19, people weren't traveling. They weren't driving their cars. They didn't need so much oil and gas. The prices for a barrel of oil dropped not only to zero, but to negative prices.
Absolutely cratered.
They had to pay for somebody to hold on to their barrels of oil. And so it's an industry that is very sensitive to demand change. So what all the best research internationally, the International Energy Agency and others are saying, there will come a point in the next few years when production of fossil fuels will drop and probably drop quite significantly and quite rapidly. And because renewable energy is taking over in so many areas, and at the moment, that peak and decline for fossil fuels has only kind of been delayed for a while because of all of the energy use of AI. But that doesn't alter the equation that at some stage soon, that demand will start to drop. And the amount of money is absolutely massive in trillions of dollars. No wonder central bankers are worried about climate change because this is far bigger than the global financial crisis in terms of assets under threat. So if oil prices do suddenly drop, all of those people who have got the shares of these oil companies are facing a future where those oil reserves in the ground aren't worth anything because they'll never be burnt. Their oil production infrastructure, all those pipelines, storage tanks, everything else, they're not going to be worth much because what are they going to be used for? And so they're often called stranded assets. So they're stranded by the fall in demand. That time will come. Actually, the Saudi foreign minister put it beautifully. Sheikh Yamani said, the Stone Age didn't end for lack of stones. And the oil age won't end because we've run out of oil. And he's exactly right. This time is coming, and people should be aware of the risk of those fossil fuels, and particularly the companies that are still expanding their oil and gas production. And you'd be surprised how many there are. And they're the major oil companies. It's the ExxonMobil, the Chevron, the BP, the Shell. They're expanding their production of oil and gas. They're not transitioning to renewable energy. And so they are, in a way, digging themselves deeper and deeper into this climate risk position. So on the Mindful Money website, what we do is you can go along to your look and see what's in your fund. And if your company, the company in your fund is expanding their exploration production, we flag it on the website so you can see it. Conversely, if it's like Contact Energy that is making moves to go renewable and is on a pathway to go to renewable energy, we put a little 1.5 degrees symbol there. So it's providing that information to people about what type of fossil fuel company there are, because there are some that are transitioning through to renewable energy, but there are others that are digging themselves into a deeper hole. And we want the public to know that.
And you'd see that as short-term thinking that's going to come calling soon?
It is really risky.
Mm-hmm.
It is really risky. And so people may say, oh, no, I'll be all right for the next 6 months. You know, Francis, you can't time the market like that. And so at some stage, that decline will come. And we think that's possibly going to be quite sudden and certainly will have a major, major impact on the world economy.
You had a little line in there that I would love to dig into more as well when you said about the central banks around the world are worried about the impact of climate change and it's going to have a big impact on our money. Can you tell me more about that?
Well, if you look at the major banks, for example, a report says that the 60 banks have $1.2 trillion of lending to the fossil fuel sector. You know, you start to look at numbers like that and you think of what happens to the banking system when suddenly those loans aren't worth their full face value. Maybe they're not worth much at all. That kind of impact is something that central bankers need to be worried about.
And have they been putting out reports on this, talking about it?
Well, there's been lots of reports on it. What we haven't seen the central bankers do yet is to recognize that risk in the capital adequacy ratios that the banks ought to be holding. Because if the banks are holding really, really risky loans, then actually that should be reflected in the amount of capital that banks should be holding. But banks haven't done the central banks haven't required that yet. But perhaps that will come. So you know, there are ways in which we can take sort of measures to make the economy more resilient to some of these things that are inevitably going to happen in the climate transition. We are, by the way, kind of really disappointed on the climate transition that the government is no longer requiring the KiwiSaver funds to report on their emissions.
Mm.
And this is an announcement that...
well, they've put the limit very high.
They've put it very high on companies, on funds.
Mm.
They've taken it off altogether. They don't have to report at all. And that's different from Australia and other countries around the world where fund managers do have to report. So we're really concerned about that because this is important information that investors ought to have. And it's also important for the funds themselves to track what's happening to their climate emissions and their policies, their climate risks, the climate opportunities that they are or aren't taking. All of those things should be regular issues discussed around the board table.
Yeah, as you say, funds aren't going to have to report on that anymore. The companies based in New Zealand were going to have to report on climate emissions. Now the standard on that, you now have to be quite a big company for that to apply.
Gone from $60 million company value to $1 billion.
Mm.
And so, of course, there aren't that many companies in New Zealand with over $1 billion.
Very few.
Of company value.
Yeah. Yeah. So it's gone from basically a standard reporting requirement to a very rare reporting requirement. Okay. So you said right at the beginning, you started Mindful Money as an easy way to compare because it can be tough out there. And of course, number one, I mean, you're on the podcast. Clearly, number one strategy is go to Mindful Money. But if people are wanting to look at and compare investing options, KiwiSaver options, what are some green flags that are hard to fake? Some things that you can look at when you're looking at these options that are really good signs?
I think the really good signs are, you know, I keep on coming back to the issue of what people invest in. Because people can go into a document, the product disclosure scheme, the PDS, which gives them all sorts of information about who the directors are and where the directors came from before and what the policies are here and there and everything else. And you can end up none the wiser about either the financial prospects of the fund or their ethical stance. And so what we encourage people to do is actually follow the money, because at the end, the ethical policies of a company depend on where they invest. And if your KiwiSaver fund is investing in companies that you have a real problem with, and Mindful Money puts them in categories of, these are gambling companies, these are companies that have been found to violate human rights, etc. You can see on the website. Then actually that's a pretty good way to be able to tell the reality of the ethical policies rather than the greenwash. And there's a lot of greenwash out there.
Yeah.
So people can read all they like on the website about how wonderful an ethical policy is. But actually, at the end of the day, it's kind of, where do you put your money? And we'd kind of try to encourage people to not get too caught up in the enthusiasm around the words, and actually look a little bit more at the actions of the fund managers.
Well, exactly. Well, what are some red flags then? Some things that if you see that crop up, that is almost certainly not going to be something that you want to be associated with.
The highest ranking thing that people are worried about is human rights violations. So that might be labor rights, it might be use of children in supply chains, it might be breaches of Indigenous people's rights. And so that's the number one issue that New Zealanders are worried about. Right up there is environmental damage and deforestation, kind of pollution, toxic chemicals, etc. So a third one then is animal cruelty. And, so those are the three kind of top issues. Kind of below that are things like weapons and gambling and fossil fuels and tobacco and so on. So those are the kind of red flags that people really should be worried about. The other thing, quite recently on our website, we've got a new category, which is for investments that harm the human rights of the Palestinian people.
Mm-hmm.
And it's an OPT symbol. It's either for weapons used in the Gaza conflict, or for companies that are supporting Israeli settlements on occupied Palestinian land, or other forms of violations of Palestinian rights. So that symbol is also easy to see on our website. There's another one that we're going to introduce, which we're really excited about, which is around oceans. So, most people have two different sides of their brain. One is about investments and another is about things like oceans that they love. But actually, they occupy the same space in the economy. That many of the KiwiSaver investments go into plastics companies, and there are plastics throughout the water columns of every sea in the world. And they're endangering fish, and they're endangering our health as well. Overfishing, and particularly bottom trawling. Mm-hmm. So many Kiwis are aware that there are major problems occurring in our oceans, and they know it from their own experience. They may, you look at fisheries catches in New Zealand, they're just way down compared to historic levels. And the oceans that people can't swim on beaches often. So there's lots of kind of warning signs from our oceans. And this is a way for people to be able to say, I love the oceans. Maybe they've seen David Attenborough's film Ocean, and here's a way they can do something about it through their KiwiSaver. So that's another way that people can take a look at red flags on their fund statement.
And I love that more sort of positive focus on it too, because I think there can be this real burden of doing the right thing has to feel a bit tortured. You have to be looking at all these awful things. And actually, sometimes it can be about what's the good stuff that I want to support as well. And I think that's really important. I mean, look, most people are super busy. Most people, it's hard enough to get them to look at their KiwiSaver at all, never mind to think about some of these issues. So if there was one thing that everyone could do this week to harness the power of their KiwiSaver a bit more, to just nudge the world in the direction they would like it to go, what's that one thing you think a lot of people could do?
I think the first stage is informing ourselves. So if people haven't looked up their KiwiSaver on Mindful Money, go and do that. It's we track this, and we reckon about 500,000 Kiwis have looked at their KiwiSaver to check out what they're invested in. But that means that there are almost 3 million people who haven't. Mm. And so it's a really simple thing you can do. It's quick and easy. It'll take you a couple of minutes to do. And so that knowledge then is the first step to doing the next step, which is either contact your fund provider and say you're unhappy, or switch your fund to find a more ethical fund. And, people have said, I've been waiting to do this for years. And then somebody said, it's really quick and easy and cheap and free to do it. And so suddenly I did it, and it took me 15 minutes. And they crossed it off their list of New Year's resolutions. This year, I've got to get an ethical KiwiSaver. So cross that one off, and it'll take you a relatively short period of time. But the first stage is to go and check out what you're actually invested in.
Love it. Thank you so much. Barry Coates from Mindful Money, making it a little easier for all of us to live a good life without, taking away from all the other things that we are doing, the 1,000,001 other things. So very much appreciate that, Barry. Look, if this episode was helpful to you, first of all, hit subscribe to Making Sense wherever you're listening, Apple, Spotify, YouTube, all the rest. And of course, send it on to a friend if it was helpful to you. It'll probably be helpful to them. We can all level up our money together. Until next time, have a great day. Just a note before you go. This podcast can only give you general information about how things work in most cases. It's not individual financial advice. We're all different, so some of this might not apply to your specific situation. Take what works for you, ignore the rest. If you're after individual financial advice, a financial advisor is always the best bet.